Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Ehrman.
Hello, and welcome back to the podcast. Thank you very much for being here. All right, before we get started, if you're a client, make sure that you have signed up for the client-only event. It is in your email. If you were here last week, you heard me talk about this, but I now have a spot for those of you that want to ask me a comment. If you want to, instead of typing it out, if you just want to basically leave me a voicemail, go to themjhotline.com. And you can ask whatever you want there, and I will answer it online as a podcast, or I will call you back, whatever. But go to themjhotline.com, and you can ask anything about insurance, anything about IBC, farming, thoughts on businesses, whatever you want to ask me. Ask me. Okay, today I want to talk about how to use cash value, what to use it for, and how does it actually work. And many people are reading Farming Without the Bank. Some people might be business owners. Some people might be farmers. Some people might not do either. They might not farm. They might not ranch. They might not be business owners. And so they're asking, how do I actually use the cash value if I don't farm? And as easy as the policy is, it's always a burning question for everybody because they will read the book and they will go through the illustrations. Now, if you have, let me make sure I have, okay, so I have my farming book and I have my life book here. So I'm going to dive into some of these numbers a little bit. But somebody said, well, Mary Jo, in the book, you talk about how you can use it for operating. You talk about how you can use it for an apartment or a car or maybe a student loan, but you don't talk about how I can use it for a business startup, or you don't talk about how I can use it for a piece of equipment or how I can use it for cows. It is all the exact same thing. It ultimately does not matter, but I want to give you a few examples because in the last couple of weeks, these have come up and people are like, oh, I didn't know. So here is one. Let's say that you are going to use it for operating. And let's say that you have $100,000 of cash value. I don't care what the number is, whatever. You have $100,000 of cash value. If you borrow money, they ACH the money to your checking account. Okay? You now have the money in your checking account so you can go write checks to Pioneer Seed, to Dow, to whoever, Monsanto, I don't know any of the names. I said Pioneer Seed. You can go write checks for fuel, fertilizer, chemical, feed, seed. I don't care. Then you're going to have that loan all year, right? And then you could pay it back at the end of the year when you sell commodities. I have a client that I talked to last week, and this is what he was doing. He would borrow the money to operate, then he would harvest, then the money would be in his account and he would pay the insurance company their loan amount back. And then he would take the loan again in 2 months and he would start the whole process over. And I said, you do stop 2 months of interest by doing that, but you don't have to. If you just sold grain and then you let that money sit in your checking account. So if you've borrowed $100,000 and you made $100,000, now you can just pay interest only to the insurance company instead of paying them and taking a loan right away. You can just pay interest only and everything will be fine in your policy. And he did not know that. He's like, oh, I thought it all had to be paid back again before my premium was due. I'm like, no, just pay the interest that is on your renewal statement and you don't have to worry about it. And he was like, oh, I'm like, once we move the money to checking, then use that checking as a connect to your line of credit, which is your policy. And the only thing that I'm going to clarify there is if you've borrowed 100,000 and you have made $120,000, that 20,000 should go as a payback, right? Because next year if you only need $100,000 to operate again, then you shouldn't need to borrow that 20. Now, if that's in a perfect world, if operating costs don't go up, but I'm just giving you an example. So for operating, or if you've got bottle calves and you're turning calves all the time and you're using that as your line of credit, just take the loan one time and then use the checking account, but pay interest only to the insurance company. Now, let's say that you are buying a vehicle. Then you might want to amortize that back over 5 years. Figure out your payments over 5 years and do an automatic payment to it, just like you would the bank. If you're buying cattle, you might want to borrow the money and then amortize it back over 7 years. And then when you sell calves, then you make your payment. But you want to get that paid back. You don't want to just pay interest only on that. And you can pay interest only if you're holding heifer calves back. And now you've got to wait a year or two before you have a payment from a calf sale. Now you can pay it back in a year or two, but in the interim, just pay interest only. Let's say that you're starting a business and we've borrowed the money because we had some upfront costs. We had to capitalize the business. We had to buy supplies. Maybe we had to rent a building. Maybe we had to buy equipment. So now we don't have money coming in yet from the business because it's a brand new business. And so again, we pay interest only until we can make the payment. And so for whatever reason, this seems to be throwing people off that aren't farmers and ranchers on how do I use the money. It doesn't matter. You use it the same way you would use it if you went to the bank. If you borrowed it from the bank for a business, they would say, hey, you need to start paying right away. If you borrowed it for a car, you would need to pay right away. If you borrowed it for a mortgage, you would need to pay right away. And so you want to just think about, okay, what if I was at the bank? What would they tell me I had to do? Because what happens and what seems to really confuse people is that I say you're the banker. You get to control that loan payback. And then people say to me, well, what's the life insurance company say my terms are for the loan payback? You don't have any. Remember, you're the banker. And it's funny how many times I have to say that because we are not conditioned to think like that. We are waiting for somebody else to tell us what to do, but we're in charge. And so for some people, that's a little bit easier than others, right? There's a lot of people that get the concept, and some of them just don't quite grasp it until they have that policy and they're actually using it and then paying it back and using it and paying it back. I actually have a really cool story. I was talking to a client the other day and he's like, oh, Mary Jo, just, I've had my policy for a few years and we were just basically using it as an estate plan and I didn't plan to ever need it. Well, he needed to go buy some cows and for whatever reason, he didn't want to go to the bank. So he said, I've got some money in my life insurance policy. So he borrowed against the policy to buy these cows. Well, then something else happened and he needed money for that. And the bank didn't want to give him any money because there wasn't anything for collateral. So they used his cows as collateral for that next loan. So not only did he buy the cows with his policy, but then he used the cows as collateral to a bank loan. Now, by all means, y'all, if you cannot manage your money, don't be doing that strategy. That's not for the meek and mild because you could be leveraged to the hilt, right? You could lose the cattle and to pay the bank off, but then you still have a policy loan. And policy loans need to be repaid. Yes, they do. That's not free money. So anywho, He was like, I didn't even think about the fact that I could leverage it like that. Yes, you sure can. That is why it is called infinite banking. The opportunities of what to use that money for are infinite because nobody tells you you can't. And the way you can pay it back is infinite because you get to decide. I just want you paying interest only. I hope. I mean, I don't, without having an exact example in front of me with somebody, I hope that that helped answer the question. It frankly does not matter what you borrow the money for, it all works the same. And so if we're reading the book Farming Without the Bank, it's not any different than if we're reading Life Without the Bank for non-farmers. It is one in the same. If I buy a business with my money versus land to farm, it's all the same. I just get to determine how I want to pay that back. So, hope that helped clarify. If you guys have questions like this, these are really good things to go to themjhotline.com and ask those questions because then I can use your question as an example, but those are things that are obviously blocking people and we need to get those answered. I'm not just here to sell you insurance. Obviously, that's what I do for the infinite banking concept, but I'm not just here to do that. I feel like there's a lot of people out here talking about what infinite banking is, but they're not actually giving you solid answers to how things work. So let me know if you have anything else, Mary Jo at withoutthebank.com or the MJ Hotline.com. Let me know. I'm always happy to answer. We'll see you on the next podcast. Have a fantastic rest of your week.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.